I want to bring on our next guest here, Scott Galloway, is New York University Stern marketing professor and author of Post-Corona from Crisis to Opportunity, and he joins us now. Professor Galloway, love chatting with you to get your take on what we're expected to hear every time these CEOs go up in front of Congress, which seems more and more frequent these days. Just first off, your expectations for what we're going to see here and what you would be asking now at this stage, since it seems like we've dug into Section 230 quite a bit.
Good to be with you, Zach. Yeah, we'll see, I think, a continued masterclass in delay and obfuscation. They'll be very well prepared. Sunder's very likable. Jack Dorsey speaks in slow, hushed tones, which gives you the impression he's being thoughtful about these issues. And Mark Zuckerberg will repeat the question very slowly, highlight how important the question is, and either give a non-answer, or if he's pressed again, say this is important, repeat the question, and agree to get back to them in 3, 2, 1, next question. This is really kabuki theater. I don't expect much to come of this. They've now been hauled in front of Congress so many times. It's just hard to get anyone to tune in when you hear Energy and Commerce Committee. It doesn't feel like must-see TV. So I'm not expecting a lot, to be blunt.
Scott, ahead of the hearing, we've seen Mark Zuckerberg in prepared testimony try to differentiate himself from the other platforms, calling for changes to Section 230. He said specifically that platforms should be required to demonstrate that they have systems in place for identifying unlawful content and removing it. What's your response to that? And what would you ask him?
So I think it's a lie. I think that this notion we would like to be regulated, and we believe that there needs to be regulation, and at the same time, they've increased their expense budget or their investment around lobbying at a greater clip than than any other area. So it's a bit disingenuous to say, it's a great deflection. We want to be regulated. Please regulate us, and then during the day have your hundreds of lobbyists fight any regulation that would do anything but just entrench you. So what would you like to see asked? I would love to know, and I'm parroting Zephyr Teachout. I would love to know, have Mark Zuckerberg. Facebook tracks everything. They're a very data-driven company. They know how much every piece of content, every brand, how much money they make from every source. I'd like to know how much money Facebook has made from QAnon, and that is from promoting conspiracy theories, creating algorithms of amplification that. How much money have they made by spreading anti-vax content? So I think some pointed questions around how much money they've made off of misinformation. And also, big tech is now a bigger spender on lobbying than any sector in history. And the other two sectors, the other two, numbers 2 and 3, are now tobacco and big oil. And given climate change, given the massive unnecessary death that big tobacco brought upon us, is it safe to say that they're now number one in lobbyists means that they are also levying tremendous damage across our nation and its citizenry. So I think there should be some pointed questions. Unfortunately, it's virtual, so you miss some of the electricity around unscripted moments. But delay and obfuscation, and they absolutely benefit from the fact that it's virtual and you can't really see them sweating, so to speak.
Yeah, Scott, to your point, not a whole lot of expectation going into these hearings because it is many times about public theater. But there are a number of bills that have already been introduced in the House and Senate. You've got those that are going after their alleged anti-competitive behavior, their monopoly power, those that are going after the policies the companies have in place in terms of content moderation. When you look what has already been introduced from a legislative standpoint, what do you think is likely to be the most disruptive to these companies and the business model that they have in place?
That's an interesting question. And Representative Cicilline, who chairs the House Subcommittee on Antitrust, has said that they're going to go after a variety or a number of legislations. They feel that they would have a greater likelihood of success if they try and find points of weaknesses or defenses across multiple proposals for legislation, as opposed to one big omnibus bill that the entire big tech army could try and rally against. I would say there's specifically some cases that present real threats to big tech. The AG of Texas has presented a case around price fixing and cartel pricing. And what's unusual about that is the remedies are criminal, and that is it's very easy to get executives to start talking when they face the potential of criminal judgment versus just civil or economic penalties. So That's important. I think, quite frankly, I think the most interesting legislation has to do with antitrust. I think that if you saw these companies, if it became actual viable that these companies were to be broken up, I actually think the markets would respond very positively. And I think you'd see a flurry of investment in new niches that people think are going to develop when the fastest growing parts of our economy are controlled by a monopoly or duopoly. It actually stunts the growth of that sector, which in and among itself, I think will create more momentum towards more antitrust policy. So I think antitrust will largely be the focus, and then everyone will focus on. There'll be a lot of theater around Section 230. I think the worst thing that could happen is if the Republican side of the aisle focused on this kind of constant complaining that really isn't backed up by data, that there's a bias against conservative ideology. I think that creates a sideshow which big tech benefits from, as opposed to going after their kind of anti-competitive behavior. And in sum, Akiko, long-winded way of saying, I think the most substantive, important, and threatening legislation will be around antitrust.
I would bet $1 million or more that we're going to hear a lot about that bias in this hearing, because they benefit from it too. Let's not forget when the politicians focus in on these issues. But Scott, when we talk about one of the companies that I think always gets overlooked, Jack Dorsey doesn't get much in these hearings, but you've been a noted critic of kind of the way that he's run the company. It was interesting to hear them talk about maybe ways to monetize the platform outside of just ads, with kind of premium subscriptions potentially being floated there. Curious to get your take on maybe that finally coming into fruition and being a focus for the company, given the way that you've critiqued Jack Dorsey in the past.
Yeah, so disclosure, I'm a shareholder. I think Twitter, if it commanded the space it occupies, Twitter is probably the most innovative company in technology. Unfortunately, they tend to give those technologies away. TikTok, probably the most important media company of 2020, was invented at Twitter. It was called Vine. Twitter has been totally asleep at the switch in terms of product development, and just some signs of life or a pulse around product development, some moves or threats, I should say, to move to a subscription model, and then kicking Donald Trump off the platform 1,445 of 1,460 days into his tenure has resulted in a stock that's appreciated, substantially over the last 12 months. So, look, Twitter is the most poorly run of the firms. It's as if the company was being run by a part-time CEO. And I say that tongue in cheek. I think it's absolutely outrageous that we have a company this important that is run by a part-time CEO. And I think that they came to the conclusion, and it was the right conclusion, although it was probably 4 years late, that being a handmaid to sedition is not a good business strategy. So I think I'd like to think that we're seeing something hopeful here, and that is the immunities are kicking in. Snap and Pinterest, which take a lot of time and effort and money to try and make the platforms less toxic, have appreciated in the last 12 months faster than their peer group. And I think Twitter's recognized this kind of moved to purity bump where their stock's up substantially the moment they kicked one individual off the platform. And with just one account going away, they got rid of something like a third of all election misinformation. So imagine what would happen if they kicked the 100 most toxic accounts off the platform. So I'm hopeful for Twitter, and I'm voting with my pocketbook. I'm a shareholder.
Scott, I want to talk about one more thing that I know you've been watching closely. That is the SPAC boom. We have this report today that the SEC has opened an inquiry into some of these SPAC deals, specifically looking into the fees, the volumes, the controls the banks have in place with the SPAC deals. We're talking about $170 billion raised so far this year. How do you think this all ends? Is this an opportunity for smaller companies, or is this really just a sign of froth in the market?
I think the answer is yes. There's never been a better time to be a private company that's doing well. You now have a ton of suitors. So it's a great time to be a private business that's a strong business. And absolutely, it's a sign of froth in the market. It's just incredible, the market's ability to produce product when people have cash in hand. I do think it might be a little reminiscent of kind of the kind of late 90s, and that is you're going to see a lot of SPACs decline in value, but there's going to be some incredible companies birthed from this. And I think it's a static financing vehicle. It's here to stay. There were more SPACs raised in January, or I think the first 45 days of 2021, than all of 2019. So does it represent froth in the market? Absolutely. Does it warrant additional scrutiny? But it's also what I call this great dispersion, and that is great companies and also operators. And a lot of these operating groups have impressive people. They've said, look, we are just as good or even better than the operating groups at investment banks who have been the arbiters of who gets to be public or not. Also, the number of public companies has been cut in half, at least over the last 30 years. So to a certain extent, this is a regression to the mean, and we're seeing more public companies. So I think it's good that we have more publicly traded companies. This is going to be, I think, a new financing mechanism. It's great to be a good private company. There's more capital than private companies right now, but there's just no doubt about it. There's a lot of them, and I think we'll see a lot of them decline in value.
Yeah, there's a lot of capital floating around on the private and public side for a lot of these startups. Scott, it's always good to talk to you. Scott Galloway, NYU Stern marketing professor and author of Post-Corona: From Crisis to Opportunity.